Hi there, Serial Trader here. I'll do an update on the major US indices and looking at this 1 hour chart here on SPX. So since my last video, I was kind of proposing that we had a bottom in place here potentially at 24.47.49. And so far that has held. And I believe that video was as of Wednesday's close. So since then, on Thursday and Friday, it looks like we potentially have a smaller degree wave 1 up. Looks like potentially a little expanded flat wave 2, ABC wave 2. And now, basically, as long as we can hold these recent lows, we have the potential here to get going in our next impulse wave up in either a C or a 3. And again, we'll judge the power of this next move up as to whether it looks like it's either a C or a 3. Obviously, if we just blast past this 4-1 overlap level at 28.55 and go past our equality relationship closer to 2900, then we can start considering that maybe it's a third wave. But if we just do a fairly measured move up here and fail below 28.55 or at or near that area, then the C wave scenario and potentially that larger fourth wave scenario is certainly still in play. So it's pretty simple here, short term. Absolute must hold level if you have a long position on right now is that 24.47.49. And if that breaks, now this is currently my kind of preferred wave count, if you will. This is what I think is most likely happening. But whenever you're looking at the market, you always need to have kind of something in your back pocket in case it goes the other way. So if this fails, and this is incorrectly labeled, what else is going on? Well, my next best labeling scheme here is this. And that is where we have a, still got a 5-wave move up here from the bottom for either an A or 1. But we're doing a more complex wave B or 2, and in this scenario we just did this ABC flat for potentially just the wave W. So this wouldn't be a double zigzag because this isn't a zigzag, it's a flat, but it could be a double 3, which is still WXY as far as labeling goes. So yeah, flat for wave W, ABC for wave W, potentially an ABC up for a wave X, and now if we do break these lows here, potentially an ABC down for a wave Y, and potentially a deeper Fibonacci retracement of this impulse wave. And you can see some, basically so far that 38.2% retrace is what we've been finding support on. But if we go deeper, we got the 50% and the 618, which ranges between, let's call it mid 23s and low 2400 area. So this is a very viable count as well if we break that 24.47.49 here on SPX. But then as long as we hold these ultimate lows down here, the March lows, as long as we held those, I would still be anticipating a bottom to form at one of these lower fib levels, and then potentially do this wave up here in either a wave C or 3. And again, still potentially part of that larger fourth wave. So certainly not discounting that possibility that even after that we could still go down further in that fifth wave. But just short term here, I still have a 5 waves up here, and so far it looks like a corrective decline, either complete or in progress. So eventually, even if we go a little lower here instead of my first count, I am still anticipating a move up to, above these levels. So above that, 26, what was the actual high here? 26.37, 26.41. So yeah, above this area here once we find some support, if we have not already done so. I currently do not think we're just going to immediately dump down to break these March lows. Even if we do break them, I think this sequence to the upside just isn't quite complete yet. So that's my take there. And definitely until this breaks, I'm going to roll with this count that says we're just about to take off here to the upside. And I am still long just one ES contract. I have not added to it. If we get above kind of this high area, let's see, on SPX 20. Let's call it 20. Hang on here. Let's call it the 2540 area or so. 2530 to 2540. If we can clear above that area, let's say on Monday there, I would be more inclined to start adding to that long ES position. But for now, I'm just sitting and waiting. And certainly, if we break down below these lows, I would just kind of pull back and wait for one of these lower fib levels to show some support before attempting another long. But currently, still holding that one ES long. Did not get stopped out yet. And we'll see what happens on Monday. If we can actually get a little uptrend going here. Start the next wave up. Certainly to be determined. But currently, this is my preferred scenario. And then, as I said, my alternate count, my next best read on things would be something more along these lines, with a more extensive correction in both time and price. But we'll have to see what happens. I certainly have a game plan for either scenario, as you should always have. Okay, now going to the Thinkorswim candlestick chart. Some things to point out here on SPX. So we're basically just kind of dancing at or near this daily T line, and there's a reason it's called the T line. It stands for trigger line, and often you begin a large, either reversal or continuation move around that trigger line along with the candlestick signals, right? So on Thursday, we did a nice bullish engulfing candlestick, closed basically right at that T line, and that again engulfed Wednesday's candle. So that was a nice buy signal. Now on Friday, we did not confirm that buy signal yet by really starting to trend up here and close above the T line, but we also didn't really break down either. We just did essentially an indecisive doji kind of day. So Friday really didn't settle the score here as far as which direction things are going to take. It just left things up in the air heading into next week. So again, must hold level to be short-term bullish here is 24.47. If that breaks, I don't know if I'd be shorting that on a break, but I'd certainly be pulling back and waiting for a little bit more of a deeper pullback to form a higher low above that 21.91 before trying to attempt another long. But certainly if we get above, let's say if we get above Friday's candle there, so 25.38, let's call it 25.40 just to be safe. Get above there, and I'd be inclined to start adding to a more aggressive bullish position, anticipating a wave up to above, that low 2600 area that we've been correcting down from. So really nothing decisive here yet, but certainly a little bit of a bull signal there on Thursday, just awaiting confirmation though. It has not been confirmed yet. Now on the weekly candlesticks here on SPX, we have that weekly bullish engulfing from the week prior, and that is still very much valid. In fact, we've basically retained a lot of that weekly candle's gains, so that's actually a fairly healthy thing to see. Now, we just basically have an indecisive week here, a fairly small range compared to previous week's ranges, so just basically a consolidation type of week, which is certainly what we've seen on the shorter term wave pattern, just a consolidation off the high there. And this bullish engulfing is on the weekly still very much in effect as long as we hold this candle, which we'd have to drop quite a bit to break that candle at this current juncture. So that's the weekly. We'll go over to the Dow Jones Industrial Average, and not a whole lot to say. Very much the same look as SPX. Looks like we have a impulsive wave up. It looks like we've either done a correction of that impulsive wave up, or we're still in the midst of doing that correction. We also have that bullish engulfing on the Dow as well on Thursday, and again just kind of an indecisive candle on Friday. So no clear picture there on the candlestick front just yet, other than an unconfirmed bullish candle. Not invalidated, just unconfirmed. Now on the weekly here for the Dow, let's see. Again, very much the same as SPX. Weekly bullish engulfing from the prior week, still very much in effect, and we just had essentially a consolidation type of week. Okay. Now on the Nasdaq Composite, let's have a look here at the daily. Very much the same thing. Impulse wave off the bottom. We're in some sort of corrective pattern off the top. Potentially the low is in place just like on the other two indices. Interestingly, we did make a minor new low with no follow through on Friday on the Nasdaq, whereas we did not do that on the Dow or the S&P. So that's a small difference. So we went as low as 72.8811 on Friday here. And just checking, and yes, that is lower than those prior 2 days, which is different than the Dow and the S&P. They both held their respective lows. But really the underlying message is still the same. We do still have a bullish engulfing candlestick on Thursday. You might argue it's been invalidated by slightly taking out its lows, but I don't know. There was zero follow through on breaking those lows. In fact, it started bouncing up into the close quite strongly from that level. So I'd still say on the candlestick front, we're basically just kind of in indecisive mode, awaiting the market to really commit to a direction. So very much the same as the other two indices, despite that minor break of the lows on the Nasdaq. Okay, and on the weekly chart, I believe things look very similar. Weekly bullish engulfing in the prior week, not invalidated, and basically an indecisive consolidation type week. So really, it's all lining up. Everything's pretty highly correlated here on these indices. Not any major differences to point out. And let's head over to the VIX, which I think is interesting right now. I think the VIX might be kind of hinting at which side to be on here. So the VIX is definitely, since we've made our peak there at 85.47, the VIX is certainly pulling back strongly, and you could even say it's in a downtrend, making lower highs and lower lows. So a VIX that's sideways to down, to me that means that the market is sideways to up, given their typical inverse correlation. So the more the VIX just keeps dumping, the more inclined I am to think that the next significant move up or wave in the market should be another wave to the upside. I think it would be unusual to see the dump in the VIX here continue and see the market dump at the same time to new lows. That just seems highly unlikely to me. So as long as the VIX continues just kind of bleeding off here, I think that's a fairly bullish condition for the market to have another rally up, even if it is just a larger fourth wave that eventually breaks down again. So VIX tilts things in the bullish direction for me. If we look at the VXX tool here that Robert Kelly has come up with, we've certainly broken this uptrend we had on VXX, got below this 70-period moving average on the 30-minute chart, and you can see not only are we basically still staying below that moving average, but the moving average itself is now in its own downward slope here. So this also looks like kind of a bullish condition for the market, because typically VXX being a volatility product, if it's going up, the market's going down. If it's going down, typically the market's going up. Okay, so that's another kind of positive as far as looking to be bullish here on the market. And again, I'm not trying to say, oh yeah, this is fantastic, we should be bullish and expect another 10-year, 400% bull market. That's not what I'm saying at all. What I'm saying is over the coming, days and weeks, or at least days anyways, I'm kind of thinking the likely direction in the market's going to be more inclined to be up than down. That's all I'm saying here. I'm not trying to declare that, this is the end of the turmoil by any means, but I take things one wave at a time here. And that's really all I'm trying to do. Trade it as I see it. Okay, now one more thing I want to go to. So on the VIX VVIX tool, some things to point out. So we're still basically in a bullish condition here on the VIX VVIX tool. The buy signal, again, certainly not in force right now, but I don't think we've extinguished it and made a sell signal either. So we're basically in neutral territory. Still below the blue moving average on SPX, but just kind of meandering below it. VIX and VVIX still very much in a downtrend, making lower highs and lower lows. I'm not seeing any divergence between VIX and VVIX, which is what you'd want to see first, and then you want to see VVIX get above its VVIX get above its red moving average as a precondition to another SPX sell signal, and right now that's just not happening. VIX and VVIX trending down, and that kind of implies that SPX should continue trending up. So kind of in a neutral situation, potentially about to reassert a buy signal. So that's all I'm seeing here on this tool. And that's really what I wanted to go through in this video. So just to summarize, I've kind of given my two short-term wave counts as far as what I'm seeing there in SPX. Ideally, we just start going up as of Monday, hold the lows of last week, and get our next wave up. That's kind of my ideal scenario. And the next most likely scenario again is further correction down, potentially to some of these lower, I'll go back to this one, some of these lower fib levels, which right now would be, let's call it mid 2300s to low 2400s if we don't hold last week's lows there. All right, so that's what I wanted to go through. Hopefully everyone's healthy out there and enjoy the rest of your weekend. Serial Trader signing off.